Hi there, guys. Slowly but surely everyone's coming in here. Sorry, a bit slow to get on there then. How are we doing there, Brent? How are we doing there, Peter? Hope we had a good long weekend, actually. A good little break, a 3-day break. Just kick back and relax. It's actually hot weather down here in Melbourne, so I just spent most of my time squirting the kids with the hose, chasing them around, which was good fun. Make sure it's nice and cold for them. Alright. Oh, I might as well get up and running. I hope there's if anyone else is there, you can hear me loud and clear. Just let me know. Linton, how are you, mate? Good work, buddy. Good work. Alright, so welcome to TradeSetup, the live stream. It's the 29th of Jan, so we're nearly the end of the first week of 2018. Kicked off, it's been pretty good at the start. It was good over Chrissy. Put on a few gains, and we've been weaker at the start of the year, a couple of down sessions, but it looks like we're going to start to claw it back. We saw the US, they smashed higher on Friday night, so we had the, but we'd sort of, the SPY didn't kick off too hard. I want to take a look at the SPY in a minute, the futures market. And we'll look at what that's doing at the moment. Look at the ASX. But yeah, the US just keeps powering higher, leaving us behind. Hey, Laurent, how are you, mate? Bonjour. Bonjour, if I'm saying that right. Yeah, US just keeps powering higher. But the NASDAQ, which is rocketing high, go near vertical. Someone sent out one of the guys I chat to quite a bit. He sent through a chart of the monthly NASDAQ. It's just rocketing high. You go down to the weekly and daily. They're all pretty much powering higher in the US. We seem to be dragging our heels quite a bit compared to the rest of the markets. But yeah, we'll see if we can keep dragging our heels and just drag ourselves back up to the all-time highs. See if we can get up to that 68 mark. We'll take a look at why we think it could be pushing towards there. But you know, the way it's going, the US will probably have a correction which will drag us lower well before that. It's just the way it just takes us so much time to put on any gains, but we'll see. We'll take a look at that in a second. Just for anyone that's new, like I usually say, I guess, up the top left-hand corner, you can follow us on Twitter. Top right, you'll see us on Facebook. An important one on the bottom right, just subscribe to us at YouTube. Anytime we go live with anything, we'll put it up there. And you'll see an alert from YouTube when we do go instead of the app. The app will send you an alert once we go live, and also YouTube will say we've gone live streaming something. For those of you who were around on, was it Thursday? We're going to start up, like we mentioned, we're going to start up a little, I'll put it up here. Actually, I've got it. There it is. All right. I don't know what that means. So this is what we're building at the moment. We're just testing it. We're playing around with it at the moment. We've got the channels. It's just something we want to have running during the days, you know, like a trading room where you can come in, you can chat with each other. We can put up comments. We can put up things we find interesting. Just to, you know, get everyone involved, get everyone, where we can come and, I guess, meet as a bit of a group and help each other out trading. Anything that's worthwhile. We're going to put up we'll do some education things, but we'll slowly build this up. And I think what I was saying on Thursday actually, not Friday, was that any of you guys that want to join in for a bit of a test run while we get ourselves organised, just send us an email. We've got a few emails through already, which is great. And we'll get up and running and send you a link across. But I just have to figure it out first. And then we'll just go from there. Alright, I'll just disconnect myself. I was probably talking to myself in there. But yeah, but this would be the room, so it'll be all sorts of information. We've got to figure out whether we can stream through that as well. And we're going to have different channels. Like, we're going to have one obviously for premium members, which will be more for paid material. Braden's Lair. I didn't call it that, but I find it's very good. Which would be more of just, you know, your general chat about ASX. We're going to be having some crypto news, anything that comes up that we find somewhere that we'll just put up on the crypto site there. So you'll be able to have access to everything there and just put up different comments where you like. So yeah, just send through an email if you're interested in all that. Now let me get rid of that. Let me change the screens just to make sure it comes through. There we are. And we should be up and running. Let's get stuck into it. All right, we'll start off. Let's just take a look at the markets. Now that, they're thickening that up. That there is a NASDAQ. That's not the monthly, but you can look at the weekly and you get to the monthly. I mean, look how it's just powered higher. And that's all your, obviously, your tech stocks. And the tech stocks have been dragging this market higher pretty much through 2017. You can see it started around mid-2016, this rally. Not the rally actually started, but that's when it started powering high. You can see it just took out the highs into new all-time highs on the NASDAQ. And it's been a steady stream. Now, that's been quite steady. A steady grind higher, a steady procession higher. Up until the beginning of this year, it really was really going near vertical. Now, anyone with common sense knows you can't just keep powering straight up without some sort of retracement. The higher you go, the bigger the retracement. And you've got to have that sort of reversion to the mean as people lock in profits, as the number of buyers just run out. They don't want to buy it at these levels. And you just get that, the fuel to push it higher, continually push it higher, just starts running out of gas. So that's where you get that, you know, people start to look to take profit, and it doesn't really matter what's happening in the market when they're ready to take profit. They just book it. So that's what, you know, looking at the NASDAQ, there's quite a few markets who are at that stage at the moment. I mean, I know there's been the Trump effect or the tax cuts, whether we think it's for the rich or not. Tax cuts for the companies, which probably you'd expect. I mean, ideally you'd expect it to flow back into the company or back into the markets, whether it be, you know, mergers and acquisitions where they're playing around trying to grow and it works its way back into the share price, whether it be dividends as well, or whether they just do, you know, a couple of payments as a bit of a goodwill gesture. I think Apple have paid their, was it Apple or Google, or one of the two have lashed out and paid their staff a bit of a bonus because of the tax breaks. Whether they get that bonus all the time, they start, I doubt it. I mean, obviously doubt it, but it's going to be interesting to see what happens, what they do with the spare cash. If they put it back into growth, you know, like I said, acquiring new assets or paying off debt or, you know, whatever they do. But in essence, that's probably why it's given this market a bit more of a kick, you know, just because on the back of that should go back into the stock in company building, I guess, and which would mean, I guess, the next quarterly returns could be higher than what is expected. I think they've been quite high of late and just gradually easing down in the US anyway. Gradually edging lower for the quarter, and it's been this quarter it's actually kicked up again, so quite good. So that is, what's that? That's the NASDAQ. The Dow, that's 26. So that's, again, you can look at that. If we go back to the monthly too, look at that. I mean, that's just gone pop. So whether it's that, I don't know if anyone's been reading, if you go and look at it on Twitter, on Facebook, wherever, it's that melt up effect they're talking about. People are talking about it melting up, and then you get this almighty capitulation as it just, you know, reversion back to the mean. So we've got a current anchor here on the Dow, which is from 2015-16, right down at 1550, 15,500, sorry. That's probably your current anchor. Your major anchor is way back here. And that's probably, yeah, no, I just figured about that. That's more of just a bit of a major correction. What was that? That was a GFC. And we've been powering high since, going near vertical now. So, you know, obviously that's what our market's looking at. We don't want to power ahead if we're expecting the US to fall over a bit. The FTSE, that made the highs, new all-time highs, just towards that 7,800 mark, has been backing off since. It's on the daily. You can see on the weekly, it's still, but I mean, it's still, trend is up on the weekly, on the daily. Bit of a correction here, so we're looking to, you know, 1/3 to 2/3 of what we talk about. I don't know if you're a Fibonacciist or a whatever you look at. This is the current leg up. Well, this is the leg up, and we're just looking for a retracement of that. We normally talk about 1/3 to 2/3, which would take us, you know, 50% somewhere around here, I guess. Just eyeballing it, 75-25. So yeah, 60% is probably somewhere. We're probably within that 60%. Sorry, 30% retracement of this leg. So the higher the better. If it's higher, it's as in it retraces lower, if that makes sense. It's only a 30% retracement. That's more conducive with a stronger market. If it's more of a 50 to a 75 or 60% retracement of a leg up, that's not too strong. And at the moment, the FTSE's hanging in there anyway. If we go look at the, was it the DAX? Go to the DAX. I mean, that pushed up into new all-time highs near 13,600. Backed off the last couple of days. Wasn't a big session on Friday, and they've got the problem over in Europe of obviously with the FTSE it's grinding higher because of Brexit. Brexit talks are more encouraging, so that's always going to be good for them. On the DAX and other, say the Euro stocks, they've got obviously the higher the Euro. There's a lot of companies that earn oil and cash offshore, which a stronger Euro just makes it less likely that they're going to generate more income, as in selling their products whatever at higher prices. They're less competitive with a higher Euro. So that's going to crimp it a bit, and that's probably what's happened on Friday night. They didn't take off as much as the US, didn't bang on that hard because the Euro kept ticking off. Now the theme in the US of the US dollar weakness, we've had, was it Treasury Secretary, I can't even say his name, was talking down the US dollar. Then Trump turned out the next day and talked it up a bit. Talked that he's happy for a stronger dollar, but obviously they don't give in any time frames. And it's better for the US having a weaker dollar. It's better for them. But, in essence, if the market's going to kick off in Europe, in the US, you're going to start raising rates, you'd expect that dollar to grind higher, start picking up a bit. But instead, it's it's been heading south. So, look, we'll see how that plays out. US bonds, keep an eye on those. The yields on the bonds, which are interest rate sensitive. The higher the yield, the more likelihood of rate rises. They've been slowly ticking higher. If that's the case, that's going to put pressure on borrowing, on debt. Just remember in the US, so more pressure on debt means less returns, I guess. And also, you might get major funds, which, we've spoken about this before. When you're not making money in stocks or have had a bloody good run on the stocks, on the share market, and it's just been ticking higher for I don't know how long now. If you're looking at it as things are getting, your valuations and everything's just getting extended and higher and higher. If you're looking to lock in gains, you want to put it somewhere. Obviously, you've got to put your cash somewhere and make money. And if yields become more attractive, you might find there's going to be a bit of outflow from stocks to bonds in the US anyway, just to get those returns, get some sort of cash. And it's a very, obviously, very low risk asset to hold. Sorry, just one of my phones going off there. Anyway, that's, there's just those few things we're looking at, but until then, the market keeps grinding higher. Let's look at the ASX at the moment. G'day, Nendo. How are you, mate? Hope you're doing well. I hope that's going through. The stream's going good. Just let me know if we do drop out. I think it's just, maybe it's the heat. It could be anything. It's just a bit slower today. So that's the XJO, which is just ticking off now. It looks like we're just up 27 points. So we spoke about this on Thursday, looking for that little pop-up. Wouldn't mind and really it's only just, let's just get that up here. I want that on a bigger chart. Wouldn't have minded a deeper correction here. You've got a little red day. There's a bit of a rejection candle here at 60, headed south during the day, pushed back up to close, close off its lows. And then we turn around today. That was Thursday. We turned around today, popped up, grinding up. So it's a high low, but very, very minor high lows. Nothing really we would take too much notice of. Wouldn't have minded a couple of down days, but you can just see the buying pressures holding it up at higher levels. Did get down to that 60-25 we're talking about, but all in one session, probably because of the long weekend as well. You didn't see too much. But yeah, either way, that market is holding up. It's probably a good spot for a little high low, just below 6,000. Just got to see how it goes from here. Now, not much to talk about there. When we got our weekly, we're still expecting this trend up to continue. So just 1 second there, guys. Say hi.
Hi. Who is it?
That's my boy there. He's coming in wanting some food, as he does. All right. So got this market grinding high. You've had a big, obviously that was through 2015. A big, I get more data actually. So this is what we're looking at. We've got a big push up here. From low to high, 4,000 up to 6,000, it's 2,000 points. If you take it, say that 2,000 points, and that's the last, well, Probably show you a bit more data. Let's go to the monthly actually. Yeah, it's a bit clearer here. So this is why we're looking at to tick up to the all-time highs. If we can just keep grinding up. You've had this big capitulation, obviously through the GFC, popped up through 2009, 2010. A bit of choppiness, retested that level at 2011, and then we backed off, built a higher low. So as soon as we get through this higher low just in here, that's confirmed, then you've got some high lows starting to hold. That's your beginning of that move up. And that move up lasted for a few years through 2012, 13, 14, into 2015, where we got to 6,000. And then we just washed out some of these late, some of the late buys in towards the end of 2014. And we just washed them out and built another major high low. So that was a good complex correction. Good part of a year. Yeah, good part of a year then. And we're looking to take this leg up. If we can get the same sort of movement higher over the same period of time, look, it could take a while yet, but we could have a few swings and roundabouts on the way. But we're sort of looking for that to grind its way back up to that 6,800. And if you measure that, say, from just below 4,000 to 6,000, 2,000 points, 48, say, up to 68, that takes you up to the highs. Probably even just blast through that with any luck. But that's your very, very longer term structure we're looking at. The weekly is still conducive to that. And the daily is still doing the same thing. So it's still grinding its way higher. Getting a bit messy. And obviously everyone's focused on what's happening in the US. But again, just remember, obviously a different market. And we could be, if you flow out of the US, don't forget, we could become quite attractive. Our XJ could become quite attractive if funds, flow out of the US. There's no more stock returns for a while because they're going to get hit. Just looking at the Aussie, they could be getting beaten around a bit. Bonds are yielding a bit, maybe not yielding as much as what people could see in the Aussie, in the Australian market. They, and don't forget, if you convert, what do you want to convert it to? Lower Aussie dollar. It could be, after US dollar rallies, sorry, the Aussie dollar falls. So, look, it could be the chance if the US dollar does rally, Aussie dollar falls, and then we start getting this rollover in equities, and people put their funds across into Aussie at a low Aussie dollar rate too. So you're selling US and buying Aussie at a lower rate, and hopefully the US doesn't kick off too far, and they look at the potential for our market to kick on a bit harder. Because we haven't got anywhere near our highs, and look for it to grind its way up to 68. That way they might be looking for returns in our market, and there could be opportunity. Who knows? That's going to be a massive flow of money. That's going to be a big change in dynamics overall. All right, what a rant. I just want to quickly look at here we go. This is the SPY 200. So what we're looking at on this is that push up, and it looks like, look, it could get there today. Probably not today, probably maybe tonight. If the US continues to grind higher. We've sent this out in the morning jump start. We do in the morning, obviously, saying that we're looking for. I would expect as we got a bit higher into, was it Friday, Saturday morning, we tend to be overextended quite a lot at the end of a session, and then you see that at the start of a day session you get a bit of a washout of buyers overnight, a bit of a washout of those futures contracts, washed out, built a high low, and we've been ticking up since then. Now we're looking for that. The original leg up was from down here at 59.34. Hope you can all see that. Which took us up, before we got some sort of correction or complex correction, was at 60.12. You got that complex correction washing out some of these late high lows, deeper correction, and then we started moving up again, or we're starting to move up again anyway from 59.64. So you take that leg up, equal to the original leg up, and that takes us up towards that 60. It takes us to 60.44, give or take. But it's it's only 6 points below that resistance around 60.50. I'd expect it to blast through there potentially, and just want to see how it reacts up at 60.50, because I think this could easily grind up to there. But the longer term, we've had this good correction. You can see push down, pop back up, wash out the latest anchor, and then we headed south again down to support. We tested that support a few times, even washing out some of this high levels here through 59.50, and then we've begun our new leg up. So whether that just continues on, it's yet to see. But I think the shorter term charts on the SPY at least are pointing pointing positive. So it'd be interesting to see if we can whether we just blast through 60.50, or where this is a zone where we could get a bit of reaction off and build a more major high low, correct a bit, and then go for a push up through 61 at 12, which is the recent highs from, I don't know, it was probably back in October. Well, we'll see. I thought we'd have a quick chat about that. All right, what's everyone's thoughts on the markets at the moment? Are we all playing it safe? I know, even though we've spoken all about that, what we just mentioned, what I've just gone through on the XJO, I'm still cautious on a lot of things because you don't want to give up any gains. We've got CSL, which is kicking on nicely. And I've really just, CSL is into new highs where we are at the moment. So everyone's a winner, as Dav likes to say. Everyone's a winner, but I think it's prudent just in the current market with the US just kicking off hard. We're extended up here on the daily chart. We're not so much on the weekly at all. So there could be more to go, a bit to go. I'm just looking for an opportunity to take a partial exit because of the dynamics of the market at the moment. I think it's prudent. It could be around 5% gain. I think it'll be around 151. And that's just right, whack a line across the highs here, and that takes you to about that 151 mark. So happy just to take something off the table on that and lock it in. We've got the others which are not playing ball. Really, the only two that are not playing ball is LPD, which it's got to hold up above $6. Otherwise, it's extended down here. We've had a good little run up and then boom, straight down. So don't know what caused that, to be honest. Probably just maybe the size of the stock, a bit of profit taking right up at highs. It's chopping around a bit, and you've obviously got these divergence traders, whatever you want to call them, and it may have a bit more work to do. So we may find that goes straight through 6, builds a high low in context of 4, around 5.5, and then goes again. We get washed out in the meantime. But if it doesn't hold up here, we're out. BLG, well, that's still pointing up. It's just this. If you look at the weekly and the daily, it's just that spike up to 341, and the way it's being rejected, that level straight back down to say that 35.5, 36 mark is not looking positive for us. So if this becomes a lower high here and we get a bit of a squeeze of these buyers, especially on the weekly, these buyers that push it up from say 22 up to 42, squeeze them out. And we've also got room to move, squeeze back down here to say 32 and still hold that trend up because the anchor's just a touch below, above 30 at the moment. We could squeeze out a few of these late buys like us and then pop up, but we'll see how that goes. The weekly still looks good. I really like that chart. It still looks good. And it's just whether or not we can hold up where we are at the moment. But hang in there, we shall. Just trying to think of what else we got. It's probably not much more. We're looking at someone sent through on big. We'll look at that. So get ready just to chuck in some, Bubs. It's getting closer. Well, we'll start off with that then. Bub is, I like that. I think that's ready to accelerate. We'll just have to see how it goes. It's in a good spot. You look at, especially on the weekly, look at that. Look at the pressure. Like we said, the pressure in, if I can get that back a bit more. The pressure in the selling at the moment is being soaked up. So you can see it's obviously kicked up here. Started 2017 on the back of all the milk products, baby formulas, all things like that. It started kicking up there. Really got ahead of itself. Obviously extended up to 95, a touch below $1. Had to just really squeeze back out some of those late buys there. Anyone that's got a bit late into that trend, squeeze them back out. We built a high low, took out the highs through to 110, and we spent a lot of time now holding up at another high low. And you can see the pressure of what we saw from the sellers. Pressure was getting soaked up. You can see the pressure's down on the stochastics. Wasn't into really oversold territory. And then the buying pressure, even to push it up here, it wasn't that strong buying pressure, but it still took it in the new highs. It just shows there's no real sellers standing in the way there. And then we've got that selling pressure coming back in as we're getting profit taking. The market's just edging lower again, really putting pressure on the late buyers, especially. Not so much the people who bought it, around 50 or way back here that have been holding it for the long term. It's more just the late buyers we're concerned with, them to get squeezed back out. And then you want to see evidence of buyers stepping back in again. And we've had the pressures being quite down into overextended territory or oversold territory. And you can see it's getting soaked up here. So we're really just watching for that break up through 80, which would trigger a trade for us, which could just trigger later today. We'll see. Not much volume coming into it at the moment, so we'll just have to see. But I think getting up through 80, then you're holding these high lows, and then I think he's going to start getting a bit of a run on. Whether we do or don't, obviously, is another point. But you can see the time taken for it to rally from here when you had that contraction lower and start lifting again. is a lot shorter than the time we've taken now. So it spent a lot of time, good part of what was through Chrissy as well, 1, 2, 3 months of just washing traders out, washing some of those late buys out, and we'll just see if they can kick on. But it's looking good. I like that chart. If we get up through 80, we'll be long one of our alerts. We'll have our stop just below that high low there. I'll have to reconfirm that before we get too far into it. But yeah, I think, look, that's looking nice. And then from there, we'll obviously be targeting a new high through 110 and see if we can get some volume come into it. You know, we get some volume, and you'll see when it breaks higher, you start getting this volume increase. And if we can get a little volume increase here, you know that we're on the right track, and expecting to really gun for those highs at 120 or 110. And look, the risk is going to be 3-4 to 1, something like that. So yeah, that's a goodie. What's the other one? I'm just going to take a look at Big. Is anyone looking at Bub as well? Maybe. All right, so I'm just looking at Big now. This is something we've had our eye on for a while. There's a few little things about this. I mean, I do like it. I mean, probably now that I've just saw something else, I'm just looking at something else. This price action, I mean, it's just what we just spoke about a second ago. You're holding, you know, the market's pushing up to new highs. It has to wash out a few late traders, but it's holding higher levels. Spends a lot of time cleaning them out, and really what you see through here, if I can just grind that through, that's probably not right, is it? Anyway, let's just draw it. I'll draw it up. Just want to make sure everyone's on the same track as. So this is Big. I think it's worth a good little explanation. So the market's pushed up, and then you've got this choppiness. And as soon as that comes in, it stops accelerating, and you really just want to see this acceleration. And remember we spoke about WHA just the other day. I didn't like the price action on it, even though it's kicked off. I didn't like that type of price action into new highs, especially after we've had it, you know, something like that. And you're getting this choppier price action. You want to see it accelerate, you know, day after day. A couple of good solid days of bang, bang, bang up. And that way, you know, there's definitely buying strength. There's no, you know, you can't really argue it. If you get that, and then obviously what I would love to see is just those inside high lows we've spoken about before. Inside, I mean, it comes down, pushes up. So you get this little pop up with a couple of days rally, and then maybe something like that. And then you've got, you know, you can really minimize your risk. You know exactly what you're looking for. It's an inside level. You've got confirmation of buyers stepping in. You've got a nice setup with a breakthrough, you know, there's lower highs, and bang, what that'll do is drag in more buyers. Inside levels, very sort of a high probability setup too. Whereas this for me on WHA is not quite as good, because you haven't got this initial thrust back up bounce. So when you get these big sell-offs, if you get the pop up higher and then you get the contraction, that's awesome, because what it does, it shows you when it's down on its lows, you're getting buyers, maybe someone who's missed it previously, and just going bang straight back in, no thought behind it. Obviously, we don't want to trade like that, but you do like to see that on your overall context for a setup. But the WHA is not really, you didn't really get that bounce. What we've seen is a bit of a grind higher, so it's not conducive to strong buying. And I mean, I don't know what's going to happen just here. We may just get that lower high come in and then just go boom straight down. Or we could just be, I could be completely wrong. We just keep grinding our way back up, and you know, I miss it. So be it. But this is what I'd ideally like to see, because when you see this type of setup, you've got a good push higher, a good pullback, and you get that sort of sharp bounce, and then you get a little wave of selling. Say people who bought it way up here and have just been holding it, it might get to this sort of stage and they go, oh look, we're not going to get back up. I'll just near break even. I'll just get out, and they puke up their position, potentially at the wrong time. And what they could be doing is the ones chasing it back up here. So if you get this little reaction higher and then a pullback, and you get this inside level where you can trade from, that's ideal. And that's more ideal to get that acceleration high and really, you know, bang up through the highs. And that's what you'd want to see. You want to see the market start to accelerate. So when you jump in, it starts to accelerate. If you get that, that's great. We just go back. I'll just clean all that up. I'm just drawing a lot of rubbish in there, haven't I? Now, with Big, what we're looking at, and we saw this market really kicked on strong, and you could see it you know, that same price action we were just mentioning, it's really starting to show through here. And then you got little setups that were really low risk setups, and you're gunning for those highs. I mean, it took off quite quick. Even a setup through here, you've got this push up into new highs. Really, you know, a couple of down days, and then it consolidated for the next few days and started picking up again. That's a strong market, and that's a nice little setup. You know where your risk is going to be, and then from there, you know, the rest is history. It just took off through to $5. And what we spent the next period of time is just washing out some of these traders. And you can see by this move, it took out this minor level here at 525 with this move down. Actually, I'll draw this up a bit better. Just want to focus in on this last rally. So what we've got with this push up, we've had this pullback, and at the time it just sort of retested that. You know, it was only retested a minor level. You could probably say that was an anchor level, not really in here, because it really didn't look back there. So we've had a little pullback, took out a last couple of day lows after it popped up. Sorry, before it popped up. Then we had come back down, retested that. If that was a strong market, you should have held it inside level here, and boom, straight back up. Instead, we rolled over, built a lower high, and we had a secondary leg down. That was just enough to wash out that level at around say 325, 330. But it didn't get too far, and you can see the steepness of this pullback compared to this. This is more conducive of buyers just supporting the stock. So this is what you want to see. And when it started picking back up here, and then we pulled back again, we spent some more time pulling back. We really couldn't get too far. For me, that's more buyers stepping in. And we're sort of, it really pulled back to that same level around 320, 25. Retested there after a washout of 320, 25. So our little washout here, it's pulled back, built a high low, and we're heading back up again. So for me, that's looking good. I'm not even really seeing too much just there. I think it's a bit extended to the upside here. But then in saying that, look at that. It was extended in the buy zone, you know, overbought, sorry. God, for a good part of a month or two. As it grinded higher. So there's no reason this thing can't just take off now. We spent a lot of time washing out, cleaning out these late buys here. They're all being washed out. We've had that washout. We've got a high low. So this high low alone is going to drag in some more buying. Anyone that's been washed out previously, potentially. And the fact is we've just taken out this lower high just here around 380. Probably today we took that out. It's going to drag in some buying. I am always going to be skeptical when the market's in that overbought territory. Does that make sense? So what I'd ideally like to see just from here off the high low. So that's your washout there. That's our washout. What I'd like to see here, I'd like to see potentially pull back, but this type of price action, you know, 1, 2, but it's going to be a higher low. Does that make sense? And then start to lift from here. And I think that would be an awesome little entry. I think that would be great, because what that'll do is, if you like me, which there would be a few traders to be looking at, if you're just a pure technical trader, looking at that thinking, oh, look, it's taking a bit of effort just to go from 320 up to 380, 60 cents. You know, I want it to gun up through $5. It's taken a bit of effort. How many people are left on the sidelines to come into the market, you know, to really give that a good nudge and take out those highs? You'd be looking at that potentially where we are, just saying, oh, I wouldn't mind seeing it. And if you get this little washout, taking out a few of these buyers, and then especially if you see the stochastics push down, so the pressure of the selling's been quite heavy, but it's getting soaked up, you know, somewhere around 350, for example, 350, 360, well, say 340, say 350, around there. If it starts to get soaked up there, and then we get a little spike up, then I think it'll be on. I think that will really set the scene for a blast up through these highs, take out $4, and you just get this nice, strong, healthy rally straight up through $5. Yeah, but big is definitely at the right end of the, I guess, right end of the setup board, whatever you want to call it. Does that make sense there, guys? Is things sounding a bit clearer? I'll wait for your comments, 'cause I know it's a bit delayed, but feel free to put in some charts also, just while we're waiting. And if anyone is anything you want to look at, just whack it into the chat. Any questions you may have, put in the chat, and we'll see if we can answer it. I hope what we're talking about here is making sense. And there's a number of ways to look at markets. You know, anyone that's been following us for a while knows we like to look at price action. And it comes more from a mental perspective, because I think everyone, and if anyone's been trading for a while and you're honest with yourself, you know that there's times when you feel the heat. You always feel the heat. Doesn't matter what you follow. There's very rarely that people have got their rules and never break them, especially from the start, as if they're a new trader. So if there's a lot of new traders in here and you know that they always break their rules, whether they got rules for a setup, they get in and the rule, they've got a target, and then they start feeling the heat and they just puke it early, they get out early, and they stop reacting to their rules and they start reacting to just what's happening to the price action. That's what we believe is well and truly shown the price action of the market, is shown in the price action of the market, rather than your MA crossovers, your stochastics, all these other things. And I think volume is obviously a big one too. When you start seeing volume come into the market, like if you can just see here, this is back in October, when the market started kicking up, you got the volume increase. Okay, you know that you're on the right side of the trade. TWE, oh, buggered, I missed that one too, didn't I? Whoa, look at that. That's awesome. So this is Paul's trade on Treasury Wine Estate. That was a good little pullback. I mean, I personally probably wouldn't have got in anywhere in here because it just didn't set up the way I like to see it. But if you're looking at your longer time frames as a continuation trade, that's great. That's really nice. I know you got in quite early too, didn't you? KDR, we did, I think. Yeah. Look, it looks good, but if you're honest with yourself and thinking about getting in, it's starting to look extended. And that's more from this, this type of move up. I guess if it's supported by awesome fundamentals, then okay, so be it. But if I looked at this from a pure technical basis, I wouldn't go near it just yet. I want this leg to be a bit of heat to come out of this leg up. I think there's more than enough opportunities where you can see which you've got this type of setup and you start to see this type of price action as it's washed out, spent a lot of time washing out, tried to go a bit lower, kicking up again, building a higher low, and then going. And I think that's conducive of a nice strong market. Up here, your risk is going to be really tight. But yeah, I think we might have had that one. Let me just see. We probably didn't even take any money out on it. No. Okay. No, we didn't have it. I think we send it out as actually something to look at. Yeah, volume. It's good. It's good. That sounded stupid. So I'm just taking a look at the Aussie dollar behind me, which is starting to... It's come off nicely, actually. If anyone was looking at that, the Aussie was picking up a bit this morning, and you look at it thinking, oh, I think it's just going to set people up and then wash them back out again and have that secondary leg, lower high on the longer time frames, and it's played out exactly like that. It's caved in from 81.10, if I'm reading it right, down. It's currently down at 80.83, so it's a good 20 to 30 pip drop, and I missed it. I was actually looking at shorting it just around before it broke through 81.10, but I just kept away from it, to be honest. And if anyone's looking at that, just have a look at the charts. You know what I'm talking about. Look at especially a 30 and a 5-minute chart for intraday. All right. Right, so we'll kick off with just KDR. We've just had a quick word about that. TWE is going good. ORI. ORI. I want to take a look at this one. I think this is worth talking about. You can see longer term, this is not looking good. If you disagree with me, too bad. I'm just looking at the longer term, so I'm trying to build the picture up. So I think it's always worthwhile if you can get used to doing that. If you're starting off on a daily chart, I mean, if you're just going to look at this is from technical perspective, don't worry about the fundamentals of the stocks. If you're looking at it from a technical perspective, trying to build the picture. If you look at this on a daily, the first thing I'm looking at, say, if you look at just this area, okay, that's looking good. It's come off 17 bucks, pushed up, quite strong, built a high low, it's going up. But then when you put it in context of what's happening here and what's happened previously, it's not looking that great. You know, we had a push up, built a high low, pushed up, then just bang. Obviously on the back of news in November, absolutely got caned. Back down to about 17 bucks. So this price action in context of what's happened there is actually not that good. You know, maybe we've just grinding higher. You're always going to get those opportunistic buys, potentially bought it down at 17.25, say, or bought it in here, squeezing it back up, and then you might get a third wave of selling or a secondary wave of selling and really knock it on the head. So what I'm trying to do here by looking at this chart, going, okay, I need more context. I need more context to the overall market. Looking at the weekly, weekly doesn't look good. And here's why. I'll draw it up. So, I mean, I'm just assuming that everyone else knows about the fundamentals and has positioned themselves accordingly, whether that's getting out or getting in. And if they're everyone, or if they haven't, they're sitting there waiting to do something. That's what I'm assuming basically anytime I'm looking at charts. So what you're seeing here is the market, you know, from the left-hand side of the chart, it's pushed up. You can say the trend is down. You can see the MAs are down. This is a correction of that trend down. Corrective action up. And then we've got that push down, taking out the lows. Only mildly. Another correction up. So if this was going to be a washout, you would have expected better, more base building at least at a higher low. Instead, we've just got that price action. And this is why I don't like it. You got the 1, 2, this grind higher. Then you get this major selling coming, boom, straight down and really knocked it on the head big time. Then you just got this little pop up. If you can see this little pop up, push down, retest the lows, even wash them out slightly. And then we started building again. But here's your major level. This is your major level on a weekly, around that 22.50. And we've just been grinding higher, you know, through 2017. You can see, okay, that was good. You could have made some money out of that. No problem with that. But I'm just trying to put you in context of what potentially could be happening. We've just washed out those highs and then something's happened. Boom, straight back down. You've taken out this anchor level at around that 1950 of this trend up. So what you naturally assume is this market could be rolling over. And if we're looking for 2 legs down, you've got one here. Potentially we're grinding highs. And this is where it puts that daily context more into, you know, more into the focus for me. You get that daily context, that grind higher, like we saw here, that grind higher. And then potentially we get that secondary leg down, boom, straight down. And then, you know, it could start the new move down like this. Or we could potentially build a high low in context of that $12 level, off this $12 level, high low in here, and then things start to look up a bit more. Does that make sense here, guys? Just how I'm trying to put the context in what I'm seeing. Look, could be completely wrong, don't care, but I don't think this is a high probability trade for me of what I'm looking for and the way I'm looking to trade it. So just going back to that daily, and this is what I'm talking about, that grind higher. That's not conducive to, you know, a very positive market, especially after we've broken through that 1950. We've just come down to retest another little, it's not an anchor level now, but it's just another reaction level. And we washed out that level and then we started to grind higher. So I don't like seeing that grindy kind of action when the market's not reaching key levels. Does that make sense? So we could have, you know, another wave of selling here for the secondary move down. I'll just put that in a different color. By secondary move down, I mean we've got one here, pop up, and we get our secondary move. You know, sort of maybe equal 21 down to 17, say, what's that, $4? Take it from 1950, 1550, yeah, about here. So that could, I mean, I don't know if it will, but if you're looking to go long here, just be wary. This could be what we're setting up at the moment. And you can see we're getting extended up here. You really just got to find a place to just be cautious, I'm guessing. But that's RRI. That's the way I'm looking at it. So ideally, I'd be steering clear of this one just at the moment. Sorry, John. I haven't offended you, but I think it's worth keeping an eye on. So anything could happen, obviously, but that's just what I'm, until this daily action changes or we start testing down to 17, we don't get there, we get oversold and we start lifting again. Then I think you could have a nice little leg up. Paul got REG. Take a look at that. If this is the daily price action, just like we said here, this is not too bad. and it's just started lifting here. 352. So you're just taking it off this high low, I'm guessing. That's not a bad entry, Paul. Where is your initial risk on that? Oh, sorry, John. So I got the price section. This is Regis. So if you bought this, I'm just guessing from talking to Paul in the past, he's probably had his initial risk maybe. If this was your entry through this sort of level, it's 352 just after that green candle. Potentially got your risk just in here, and it's turned out well. I mean, if that's where your risk is, maybe your risk is just below this 340 mark. But yeah, what the good thing is, probably gonna have to go back a chart actually. No, all right. We'll just draw it just quickly on the weekly. This is Regis. So you've got all this action. You know, we struggled up here, and we've got this big sell-off. Then you started really getting sold off here. You probably got down to here, a little correction down. Really just retested the low. So that pushed down here, and then if it starts lifting off here, probably not a bad trade at all. And especially in conjunction, if you take it across the highs, after this breakthrough here, probably not too bad at all. It was a bit, you know, probably a bit more risky than what I'd think, but recovery of MACD indicator, okay. So yeah, I mean, the good thing is you can see what's playing out here. You can see this contraction. It's starting to hold up even after this push down. Once you start, we'll have to go to the daily just to refine that, what I'm talking about, but this little couple of weeks down here, and it's pulled up short of this low at 320, fell short, and it started lifting again. You can only see that on the daily, and it started lifting just in here. Got this sell-off down to 340, really just retesting the previous, like we just had up here, that retesting that support. This becomes a washout, and a washout's more conducive to washing out some of these buyers, cleaning them out, and once you start building again, it's not a bad time to get in. Does that make sense? And it's only probably now the last few days that it's really popped up through that that downtrending resistance, and we're starting to build from here. And we're just taking out this high, lower high at 390. Everything's looking good. So it's really, I guess, for Paul now is just to see where he's going to take it, where he's aiming to take it, what's his plan of attack for it. We'll keep an eye on this too, Paul. See how we go. Qantas. Yes, it'd be interesting to see if this can get some legs. The weekly's starting to look a bit stretched up here. And don't forget that, if I just go and draw that again, the weekly anchor's way up at 480. So whether this is just 1, 2, 3 moves up, we just keep grinding higher, potentially have another sell-off down to test support, who knows. But I think the fact that it's broken out of that contraction is always a good sign. If this type of price action happens within, you know, if you push down, and that type of secondary move up happens within contraction, and I mean before it breaks out, then that's not too good. And especially if you see a lower high, you would expect it to start pushing down, to trade down to lows, even retesting. I mean, who knows from there. The fact that it's pushed up out of contraction, and that's by breaking this line through here, resistance zone through here. The fact that we've broken up out of it is not too bad. And I think it's different to this type of price action here. So yeah, it could just grind its way up. What you might be getting, you might get a bit of a reaction zone up here. There's even a minor level through 450. We might get some reaction lower, where people start locking in some profits. So we'll see how it goes. Right, Qantas. I'll look at AC8 too, Nando. I think I'm probably going to kick myself when I look at it. Is that the one you had as well? All right, Qantas. We had that as a long through $6 because it's such a major level. You can see that move up through $6. We were looking to go short. If anyone was following us back then, looking to go short with a rollover through here after a washout, but it just didn't happen. So then once you see these and it was mainly through here. I'll draw that up here. You just give me heartache, Nando. I know what you're doing. I know what you're doing. So this is where we were looking for a short. Essentially, we were looking for it to roll over, build a lower high, and then bang, wanted to go short and take that down. But instead of seeing this type of price action, we were holding high lows here, here, and we flipped over and went long just below that $6 level, and took a little long up through 640. Got stopped out for a small gain, locked in some gains on that. And what we've seen since is that push down. There's a few things about this. We've got what we may be seeing, and this is all, again, this is just building the picture, going back a few charts to see what overall could be happening, whether this is just a major washout, and you know that there's going to be breakout traders into new highs, going long, you know, and that's why we took the long. Essentially, just it was preempting or front running that move up. So for us, we were just looking for that squeeze, you know, just bring in those long traders and squeeze them back out again with a move lower, and it played out nicely. We got some gains to lock in through from that trade. So from here, I'll draw it up again, but what we've got to question is, well, what's this zone? What is it in context of the overall market? And if you go back to probably the monthly, is that just a squeeze of that high, and then we're going to have a long-term pullback, a decent correction, because this is a good leg up, don't forget. And if we draw that in the weekly, if you take it from $1 up to 4, add $3 to these lows, 3 up to 6, yeah, give or take, that's, you know, that's had two good strong moves up, whether it's equal and opposite. It's not equal and opposite, it's equal to the original push up through 6. Good correction. We've had a good push up through that $6 mark. So are we due for another correction, another corrective action, complex correction, whatever you want to call it, a good pullback, or is this it? On the weekly's had a good sell-off through here. So if we go back to the daily, the thing is the daily has just broken up. I want to draw it up. Oh, it doesn't really matter. I've got the same chart, haven't I? The thing is, on the daily, it's just that move down. It's just broken out of it. So we could be, and this is after breaking through a key level. So this is a key level on the daily chart. A good little anchor. It's broken through that anchor as well. Push right down. Are we going to drag in some more buyers, getting ready to really just build a lower high and squeeze back through these lows at 4.70, or are we just going to grind our way higher back up to $6? I think if you're going long in here, there is potential to make money on that move back up, but I'm a bit skeptical that this move here, after breaking through some key level, is just going to turn on a dime and boom, straight back up into new highs through 650. I'm more, especially that you've got this move from being oversold for quite a while, all the way down here being oversold. The pressure of buying, bang, in from oversold to overbought, hasn't really got it too far. It means that there's still sellers willing to get out, and whether that's from way down here, you know, whether they've had it longer term and have seen this push up and then failure and just looking to take the opportunity of locking those gains, who knows? But the fact is it couldn't get too high. Maybe it's just going to blast up and then we start getting another secondary move lower. I mean, I don't know, but I'm just skeptical of this at the moment. Yeah, so you're looking for that recovery from the RSI, from oversold. Pretty much the same as what we're seeing in the stochastics, coming out of oversold, pushing up to overbought, taking advantage of that recovery. But then you want to see, you know, where the seller's going to come in longer term. We start getting overbought again, get some sellers, who knows, or we just grind our way higher. So from here, it'll be interesting to see how it goes. What I'd ideally like to see is the longer term. We've had a move down, we're starting to push up. I'd like to see it hold higher lows. If I draw that better, hold some high lows, and then you get, you know, this sort of action on longer term, and then boom, I think that's going to take us up and through, and it could take us to new highs. But just not from here. I'm sort of looking at this thinking, oh, we could roll over, could push up. I mean, who knows? But if you're not certain of which way it's going to go, we're not seeing anything, I'd just stay. I'll basically stay on the sidelines with my trading anyway. But we'll see. We'll see. What else we got? Qantas 540. I do actually think we're going to get that spike higher, Paul. That's beautiful, mate. And that's a good thing when you're reading the price action. What we're talking about, we don't know what's going to happen, but I think you've recognised is that grind lower and it started to kick up. So if that's kicking up, what's going to happen from there? Maybe we don't know longer term whether the weekly is going to take hold or we're going to get a contraction higher and then roll over and that weekly pressure to continue to push the market down, but at higher levels. So what you're taking advantage of is probably, that, like you said, that short-term pop-up. If you can get it up to 540, that'd be great. But we'll see. That's really nice, mate. AC8. Now, I know you've been waiting for this, Nando. Lucky you can't see the tears. Oh, look. And the thing is, this thing could just go bananas. Let's just look at the others. I'm going to show you why I'm hurting. We've had this a couple of times on a run up to 2. We finally got out at $2 and went boom, straight up to 380. So we missed a lot of, massive chunk of this, and then it had a good pullback. And you can see it's holding higher lows through here. We had another push into new highs, 460, big washout here, and this is on the weekly. And look at the pressure. Pressure to selling was pushed all the way down to oversold, and we're in that zone where we've retraced 50% of this move up. I want to draw it. And this is on cans. This is just why I'm kicking myself. I reckon it's poised. Can is probably poised to, continue on. It's more of this move up. It's not really longer term. Longer term, we could have a bigger correction and still hold the really long term move up. But at the moment, what we look to be doing is that's had that leg up. That's that correction. Another leg up. This is a correction. So it's in a nice zone to hold 320. We just have to see how it goes. And that's on the week. That's on the daily, actually. And this is can, by the way. That's looking poised to go. It's not... See that little rejection just on this candle here? That rejection is looking good. And we've had starting to get a pop-up. And again, that's your 1, 2 moves down. But still in context, the overall trend up. And if I just draw that... And that's... If you're looking at it... If I clean this up, that's your move up. We've pretty much retraced about 50%, probably over 50%, probably a bit more, 55, 60% of that move. And it's in the zone to really kick on. And you can see the pressure this push down previously has got some buying. When we've gone down to oversold, that 10% mark, we've really lifted and kicked on hard. So if that's the case with Cam, we're gunning for those back up through those highs at 460. So add that to the marijuana story. I think this is a little bit different. Look, that's a powerful move up. But we have spent... we spent a lot of time through probably most of 2017 after getting these highs, really building, and it was really this move up, through November. Then you got that pullback. I think that's when I joined the fray on AC8 there. And I can't remember where it was. 65 somewhere. 60 to 65 cents, I think it was. Looking for that to hold. And then I got this power move. I actually got out at 120. So I puked it a bit early. But this price action here is looking quite good. And I think as long as we get lower highs holding... As long as we get those lower highs holding, high lows holding here, it's on the cards for another spike up. And look what we're doing here. It's really your flag, your pennant, whatever you call that technical structure. It's looking ready and raring to break up. I think if it got up through sort of that 185, it's confirmation that we're getting out of contraction. We're looking to expand up. And it's just a secondary move to this one. So that's just going to continue. And it's the fact that, the lowest we got of this leg up is probably at 30% retracement. So that's a nice, strong, healthy, that's a strong move on the AC8. So I think it's worthwhile. Just keep an eye on this one. I'll probably forget it because I'm hurting. But there are a few tiers there for you, Nando. You can't see them. There's no video, so... all right. What do we got? AEB. Let's look at that. Last one. Look, don't like, straight off the bat, don't like that retracement, the way it's retraced. I'd rather see it hold higher levels. Again, we just spoke about that. Same sort of reasoning behind it. When you see this nice spike up, probably on the back of news, a bit of following, they chase it up, and then bang. There's nothing, for me, when you get that sort of move down, I'm only just guessing. I don't know what's happened, obviously. I'm just guessing that's news that's ticked it off, from 3 up to 7. And the way it's come back down, it's like there's no real substance behind that news. So you just get a lot of profit taking. The people who probably bought it through here, anyone that's maybe known that's going to kick off. And you can see it's got some volume on it too. It's got some really volume that kicked off here. So anyone that may have known that early have locked in some profits, but they're not too happy just to hold it, if that makes sense. So when you see that type of thing, I'm skeptical of the move. That's probably all I can say. And really, it is whippy. It's happened before. You can see the spike up, and then we got to new lows. Spike up, opportunistic. This is on the weekly, don't forget. Spike up, and then we got into new lows again. We just started grinding lower. So who's to say this is not going to happen here? Just grind lower all the way back down to 2. So I think it's got a history of that, and that's why I'm not too keen on just that latest price action on that, but we'll see. QBL. I might just look at that and we'll call it a day there, I guess. I can't spell QBL. QBL. Bauxite, is it? Alright. Oh, that'd be interesting. Look. This is a bit different, I think. This little spike up, obviously news, opened up at above 11. Boom. Straight back down again. So it's cleaned out a lot of these buyers. So you got a lot of people that bought it on the open, up near 10, 11, are holding on for dear life. So they could get squeezed out. So just remember that. Especially look at the volume that's gone up through. Who knows if they're longer term? I mean, not saying they're all short-term traders, but just remember when you see that kind of thing, when it opens, gaps up, and bang, fills the gap pretty much in nearly one day, and we've come back down and filled that gap. If we pop up now and build a lower high, I expect that to take out 5 and drain all the way back down to 3, say. And that's going to put a lot of pressure on these late buyers here on these spike up. Euphoria buyers, people got a bit excited, a bit ahead of themselves, didn't buy it for, weren't patient enough to wait, I guess. Or we just pop up, hold high lows, and then away we go, and all these little guys can breathe a sigh of relief. But we'll see. It is, that's we've got a spike high, and we spend a lot of time doing nothing. If you bought it here, and we get the same sort of price action here, we come back down and we do a couple of years of absolutely nothing, then it could be just one of those things. It's a story-based move. And if it's just come out saying we've got to, we're expanding our resource, we haven't confirmed it yet, we haven't got a JORC resource, but we're getting better hits. They'd spend the next 6 months drilling some holes, testing it, finding out they can expand that target zone. It's really doing nothing until it gets a JORC resource. But we'll see. QBL, keep an eye on it though. Yeah, true, it was. All right. We'll probably call it a day there, guys. Thanks very much for joining us. It's been a good session today. I've enjoyed it anyway. Hope you all have. We'll be back in on Thursday. Now, just remember, if you want to be part of that just the new test trial period or whatever of the new forum we're going to get up and running, just send us through an email at support@tradesetup.com.au. And we'll put you on the list to get you up and running. This is it here, isn't it? This is it here. You want to be part of that, just send us for a request, and once we figure out what we're doing and stuff, we'll get organised. All right, so thanks for joining us. We'll be back in on Thursday. Cheers, guys. Speak to you soon.